Appreciate you joining us for the final bar. I want to bring on my guest, Trevor Neal from the Beta Group in London. Trevor, thanks so much for joining us.
It's a great pleasure, Dave. Good to talk to you again.
Trevor, known you for a number of years. Our former Bloomberg colleagues have always enjoyed following your work and having a good dialogue with you. Thank you for sending a couple charts ahead of time. The first one is a really timely topic, obviously, for investors in the U.S. It's looking at the relative performance of the U.S. versus the rest of the world. What are you seeing here?
Well, first of all, when you the information in this way, so this, you said the USA versus the S&P versus the rest of the world, the major market indices of the rest of the world, you can see this incredible outperformance that we've had in recent years. I mean, making these new highs. And I put in there, the blue line is above it is overperformance, below it is underperformance, and then I put two lines on which are one standard deviation, so that contains 68% of the data. So we're way ahead of that. This move is extreme, this overperformance move. And what I wanted to talk about is really what is likely to happen in this relationship. I think, and in my next chart, I think it will show that I continue to think that the stock markets will continue to boom, but I think there may be some rotation. There's a danger of some rotation out of the U.S. Stock market, so in favor of others. One of the things is that this is a relative thing, so we're looking at the performance of the U.S. stock market versus everything else. So everything else could start to outperform compared to the U.S. stock market by either the U.S. stock market going down and them going up, or them all going up, but the other ones going up more quickly. And that is actually what I think will happen. So this chart just shows the current position, this extraordinary position of complete dominance of the U.S. stock market versus the rest of the world.
No, it's a fantastic chart. It shows you how extended that theme has played out. I mean, just much further than I think a lot of people expected here in the U.S. Your second chart was looking at more of a breadth take, looking at 52-week new highs. And this is on all country world. What does this tell you?
Yeah, so this is, as you say, the whole world rather than just the USA. And what we're seeing is something very, very rare happening right now. And you see where you've highlighted it's 15%, that line there. And so this is a percentage reading of stocks making new highs. And we put a horizontal line at 15%. And then you can see there's a highlighted 1, 2, 3, 4, 5 occasions there. We've come sharply up through 15%. And then look what happened next. So in the middle of 2003, we came up through 15%. Then we had that long bull market run going from 2003 up to 2007. Then the next occasion was in 2009, the end of 2009. Then we had a 2-year bull run following that. Then the next occasion was at the end of 2012. We had a long up run, a bull market then running through to 2015. And then we had the next one was at the end of 2016, circled there, the move 50%. That gave us the big leg up through 2017, 2018. And then now, right now, we're having another one. And so when I'm talking about the previous chart and the outperformance of the United States, but here we're talking about 70 countries and the new highs, percentage of new highs, and the reading is indicating, and a very consistent indication, that this is another break and could be the beginning of another big leg like those other ones that I've just described there.
Wow, that's a fantastic chart. I love the history of it, and it's amazing how much this is actually lining up with some of these previous observations. I mean, so far, over the last 20 years, 100% of the time, that's actually followed through in a pretty big way. This is preceding each of the significant cyclical bull markets. Now, the last thing that you sent, which I really, really love, the RRG charts. We have Julius de Kempener has a show on StockCharts TV. I know a lot of people follow his work. Yes. What are you seeing now looking at the rotation of some of these global indexes?
Yes, you mentioned about these charts. I've got to give a credit to a guy called Colin Thomas, credited him on the charts there, and the stock and index not included in the United States. So that is his work, but he's a graphs I want to share with you.
Very good.
Final point. So the first point is that we've got this outperformance of the United States. Second point is, I think that we're starting another significant bull market. And then now I think it might change in rotate in leadership of it. Now, I think many of your listeners will be familiar with this from Julius's work, but just for those that aren't familiar, what we've got here is a scattergram. In the middle of the scattergram is the MSCI World Index that we were looking at before. Then everything on the right of 100, the vertical 100, is outperforming the MSCI World. The furthest to the right is outperforming the most. Furthest to the left, the FTSE, is underperforming the most. Then we've got 100 across the screen, and we've got above 100 is with positive momentum. And so this is outperforming with positive momentum if it's in the top right-hand quadrant. If it's in the top left-hand quadrant, it's underperforming, but with positive momentum. That's things which are gaining relative performance. The worst place is bottom left, which is underperforming without a positive momentum. And then on bottom right, we have weakening. So these are outperforming things because they're on right of 100, but they are weakening in their momentum. So the most best looking things are moving into the top right in a northeasterly direction. That means they're increasing in positive momentum as well as relative performance. So what have we got? Looking at the S&P, you see the S&P is very close to the middle, the crosshair there. That means it's correlating and moving along with the MSCI World. Actually, it is the MSCI World. In fact, it's a large part of it. We've got the clear message of the underperformance of the FTSE, which in these little chevrons behind it are weekly samples. So behind it is last week, week before, and the week before. So we see it's heading westerly, which is the wrong direction. And this is largely actually to do with the strength of sterling recently, which is the FTSE is very vulnerable to that because it has many exporters in it. But we've got Japan up on the top right there, the top X there in Japan, which is in going the right way and in the right place. But then you see the rest of them there are we've got the German DAX, we've got the Italian index, we've got the CAC index. So basically we've got the rest of Europe, except for the UK, dominating that area. RTS is Russia, of course, but we've got the European stock indices dominating, outperforming currently the S&P. And I think there's going to be more growth of this in this scenario where we have overall strength and another leg up in world equities. But for a while, I don't know how long this will last, away from the S&P where there seems to be some headwinds potentially for it, and allowing other ones, it made up, but actually better performance from other European shares, not yet the FTSE, but other European stock indices and markets are where you can get performance growth.
Trevor, those are three fantastic charts. I feel like with each one of these, we could spend an hour going through them. There's so many good data points. We'll just have to settle with having you back another time. Thank you so much for joining us. I know it's a late night for you. Really appreciate it, Trevor.
It's a